So Daniel, if you can just give a little bit of background to what you're doing before you got involved in this mad blockchain world and what you're doing now. Thank you.
Hi, thanks, Johnny. I'm Daniel. I started my career in derivative trading tech in the early 90s. I was lucky enough to stumble on a disruptive technology in the late 90s, which became global. I really started to get into disruptive tech. The British government appointed me to advise the EU and then the British government on disruption and innovation. I co-founded another 5 firms in the 2012 to 2015 in trying to do disruption again around the world, and stumbled onto the blockchain in 2016 through the IBM route, actually, and realized that this had the potential to disrupt almost every industry. So I stepped down from everything I was doing, focused on that, and was the first co-founder of a quite well-known blockchain project called the Atari token, which is a future of work project. And now I'm looking at how we disrupt in the space generally.
Brilliant, thank you. Seema,
Hi everyone, I'm Seema Kinder-Johnson. I'm co-founder and COO of Nuggets. Set up Nuggets in 2016. We are a digital ID and e-commerce payment that basically saves your personal and payment data securely in the blockchain. So when you log in, you pay, you verify your ID, you don't share it with anyone. Previously to Nuggets, I used to head up go-to-market globally for Skype and for Microsoft's consumer apps and services. And really for the last 20 years, I've been in some form of product or delivery role in, product and engineering. That's me.
brilliant, thank you. Adi.
So my name is Adi Ben-Ari. I'm the founder and CEO of a company called Applied Blockchain. My background is technical, so 20 years in enterprise technology. And about 4 or 5 years ago, started the company Applied Blockchain when I came across the tech and obviously saw huge potential in it. Our clients are split 50-50 into startups and corporates. And most of our projects, I would say, if I had to draw a common thread between the projects where we're building blockchain solutions, we're generally tracking physical product in supply chains and post-product delivery. And I guess the interesting thing from a financial services perspective is that these physical assets are being tracked, but then the value in tracking them is knowing that you have a secure history of the asset, and therefore you can value the assets correctly, and then you can offer, or you can buy, trade, and offer financial services like financing and insurance with less risk on top of these tracked assets. So that's kind of the main thing the common thread across many of the projects we've been working on. And the last year or so, we've focused on a next level technology called zero knowledge proofs, and we started building a product in that space as well, both with blockchain and without blockchain.
Brilliant, thank you. And finally, all.
Good morning, everyone. My name is Lior Abehasera. I'm the co-founder, head of investor relations and business development at Lysium Partner, which is a real estate investment manager. My background is investment banking. So I worked for more than 12 years between Paris and London for French banks, BNP Paribas and Natixis, on equity derivative and structured products. So I was on sales, covering institutional investor based in Switzerland, then after emerging markets being Eastern Europe and the Middle East, and lastly the UK. But I left banking late 2017 to launch this new venture. And in a nutshell, we are offering a real estate investment fund focused on US commercial real estate. And the shares are available as traditional paper-based shares, as well as a blockchain/digital based share. That's about it.
Brilliant, thank you. And sorry, I didn't really introduce myself. I basically set up a fund management business back in the 80s, literally as the FSA started. And so most of my working career, I've actually been involved in managing people's money in pension funds and what were PEPs and now ISAs, and trust funds and the like. So when Jane asked us to sort of come and help her on the panel today, particularly interested in looking at some of the developments and some of the things that are going on in the tech scene. And it's quite interesting talking to people like share registrars who are openly saying their business is toast because they have a list of information and data which is out of date all day long, and then it's only up to date when the markets are shut. So they're looking at how can they use the technology and how they can be more compliant, which is quite interesting. And in terms of other trends, it's quite interesting. Had we had this conference, you'd all been sitting, we'd gone back in our TARDIS 2 years ago, then I should imagine there'd be a big obsession about ICOs and raising money. So I suppose that's one of the first questions I've got that I'd like to ask you guys. How has the market changed in the last couple of years? Seema, have you got any thoughts on that and where we were and now where we are now in terms of a trend?
Yeah, absolutely. So if we're talking about blockchain specifically or DLT technologies, I would say I'm talking from my own experience here. In 2016, when we were looking to explore the technology because of its zero-knowledge storage, its high level of encryption and all of those sorts of things, it was a super nascent technology, right? You were going into meetings, you were talking to investors, potential partners, and you were having to educate them. Most of the meeting was around what is DLT, what is blockchain. What we have seen after 2016 is real sort of, because of the adoption, and we've, by, I would say corporates as well, it's actually become a serious contender. And I think everyone agrees now that it's here to stay. And what's been quite great for projects like our project is that the craze that was around the ICOs, it was really tough to get away from that and talk about blockchain as actually a valid technology type. So it's actually a really refreshing thing and great to be starting from here where there's a real reason why we're using the technology versus the craziness that was around it on raising money.
Okay.
Yeah.
And Leo, you've come from a very traditional asset management background. You can't make your mind up whether to be in Great Britain or Frogland, as I always refer to. We work together, and I'm the roast beef in the office, and he's the froggy. So it's not being racist; it's just sort of that's the way we go. So how have you seen it when you talk to some of your other colleagues and friends, both in Paris and London?
I would say that over the years, I mean, for the last 2 years, there's been indeed a drastic change in how professionalized the space has moved to in the way that, the big game here is to attract, from the perspective of financial products provider, being asset manager or investment banks, or is to how to attract big money. To attract big money, you want to target institutional investors, all right? Or maybe if you want to do perhaps tomorrow a public offering, you have to do, to play by the rules, right? So first and foremost, you need to set up a team that is relevant and credible in whatever underlying or asset class you're working on, being equity, debt, real estate, so or VC, right? So because this is what the investor wants to hear about. Technology is the cherry on the cake, right? Because that's what it is. And so the team for the underlying. Then after it's about, or at the same time, it's about how to deal with this offering in a legal, of course, and a regulatory friendly way. And when you go and knock at the door, I'm sure there are some in the audience today, when you go to see lawyers, and that was our experience, or tax advisors, and and you ask them, well, I'd like to create and launch a new fund. Can you help me draft a private placement memorandum? Okay, no problem. Come back in 2 months. That's how much. So, oh, by the way, we want to make it in a digital/blockchain-based format. I say, oh, what is it? But they understood very well, very quickly, that's the future of their business as well. So it took us a bit more time than expected to have it drafted, because basically they never did it. But we went through it. So good team, regulatory friendly, and when you have both, then therefore you are able to go to the market. And from our perspective, we think that the idea is to have like a kind of a hybrid approach, meaning that if you go to see traditional investor and you start speaking to them about digital technology, oh, they're afraid, what is this? Maybe later, not now. So that's why we decided to offer it in a traditional format. So a limited partnership for American or non-American investor, very traditional, as boring as possible in a way. And on the side, after we reach enough money on the traditional format, we will open the digital format through a crowdfunding platform, right? And let's say the digital format has additional benefits, which I guess we will discuss a bit later on. And the institutional investor, today, they will invest in the traditional format, but if they change their mind in the future, right, perhaps likely when they understand, when they're able, when they are ready, they're able to convert from the traditional format to the digital format, and enjoying therefore the. I mean, we made a lot of progress because the ecosystem has built itself. I mean, alongside the different teams, a lot of them have disappeared. Some are still there. Well, it's exciting times.
Okay, thank you. I'd like to throw it open at this stage to anyone got any questions or comments that they've seen in terms of trends they'd like to share with the audience and that's happened over the last couple of years. Has anyone got a burning question or point they'd like to make? Oh, for goodness sake. Okay.
There's
yes,
one.
the lady, yes, Bridget.
So I did some research back in 20...
Oh, hang on. I think we might have to wait for a quick... We got a mic there, please. Thank you.
Thank you. So after we had the December 2017, January 2018 heights, obviously it brought a lot of interest, just the prices on Bitcoin into blockchain. From what I was looking at, there's an awful lot of people who've been in the traditional financial spaces who have been charged with going ahead and looking at what this technology can do, and then decided to set up their own firms because I think they want to work faster than probably the banks or the larger companies they're working with. And then I've seen some in the asset management space saying, well, we did that and we've already come out because obviously they weren't able to find the funds coming in. So I know that behind the scenes there's been institutional rails being put down, but realistically, how far have we moved in the last 18 months on that?
Okay. I've got a couple of comments, but if you would... Addy, would you like to...
Yeah, and just a general comment. I think we've been through a typical technology hype cycle. So we've had people really learning, being educated, and getting the potential of this technology. We've been through that, and people sort of seeing the logical conclusion, as some people said here, the customers get it. Then we've been through some early development of the tech. Then I think we've been through some investment which was really over-enthusiastic and maybe not all at the right projects. So not all those projects have survived, but the tech is sound. The logical conclusion is still there, and so it's a journey, right? And we get this with most technology. So now I think it's really interesting times because you can see what has survived, and what are the kind of baby steps that are being taken now in real businesses going forward. And that's what we're starting to see.
Yeah. What I would just to complete what just said, I think it's important to, I guess, differentiate, like, I guess, buy side and sell side in the financial space, right? So buy side, the one who invests. I mean, technology or not, at the end of the day, this is what I was saying before, they're interested into how to make money, right? So technology or not, they will go if the project makes sense, and using a new format will take time. We are not there yet, but we are making progress. Now, on the sell side, so again, if you are, I don't know, an investment bank, a retail bank, an insurance company, a private bank, an IFA, discretionary fund manager in the UK, right? Here, they start to understand, I mean, that started a little while ago, is that there are two parts. The first part is how to use the technology to attract millennials, the clients of tomorrow. And they saw in 2017 that all these millennials, they've been like crazy, reading, very excited, reading, white papers, doing their own research and being very active. Say, oh, that's the way to, if we use the technology to attract our clients of tomorrow. Or I was last week in Switzerland, replace millennials by next gen for private wealth clients. That's exactly the same. So on the one side is how to attract their clients of tomorrow, and they are being investing quite heavily on that part. The second part is how to use the technology to maybe streamline their let's say operation, being back office for on a transactional basis or a compliance. And there they have invested, I mean, quite heavily. It's going to take time, indeed. But again, back office and compliance, there are drastic savings to be done, and a number of moves have already been done.
Daniel, is there anything you've noticed?
Yeah, I've got to say I was a massive fan of ICOs at the beginning. I first learned about them because I was on a panel that was titled Investing in Blockchain. And then Brave did their ICO and raised 37 million or whatever in 7 seconds, and they renamed it to ICOs. And it fascinated me. And obviously tokens are a really important part of a decentralized system to encourage good behavior and get people involved in it. I think what happened, unfortunately, is we had two innovations smashing together at once. and they didn't really work together at the time, which was money raising in a new way and tokenization. And because it happened so fast, the people that were ill prepared and the people that could just be fraudulent, and there was a lot of fraudulent, could make claims, on stage compared to people that were trying to do it properly, and their claims were much better because they didn't have to worry about, being truthful or regulation. And I think that's very interesting. The other thing you've got to think about ICOs is actually not as much money as we think went into them, because it was a highly inflated market. So people were raising 6,000 ETH, for instance, at the beginning, and that was $600,000, and then a year later that was $10 million. So, and because people weren't exiting their ETH that they were raising in ICOs, that's what the inflation was. And the crash was actually a lot of the ICOs exiting very, very quickly. So I think we have to look at this, and I think we're going through this sort of despair at the moment, and I still think ICOs will have their day. I don't know when they will. I think we have to get tokenization right, and we have to get money raising right. And the way innovation and disruption normally works, we probably can't even understand how that's going to work yet. And I think we're going to have to go through a phase now of equity raising, and we're going to have to go through a phase of understanding how tokenization works, and then a pair of people somewhere in the world will come up with a eureka moment, and we'll have the next phase. At this stage, I think we're going to see a lot of big companies doing things that are not going to be very innovative. They'll just be variations on their model. But that will be the foundation for the next phase, and that's when it's interesting.
Bridget, I think the big change has been, talking about ICOs, yes, that was very much bottom up, and it was a lot of entrepreneurial tech startups. You consistently meet sort of, extremely clever ladies and gentlemen that had 2 or 3 PhDs from Estonia or sort of Wisconsin, and you had no idea what they were talking about, but it sounded great, and they managed to raise a whole lot of money. But a lot of it was, at best, questionable. So that sort of bottom-up approach seems to have been completely turned upside down, and now you're seeing a top-down. And you're seeing more and more companies looking at the compliance, the regulation. You're seeing corporations. Facebook is clearly the extreme, but it's if you like, the gorilla in the room that potentially could make a huge difference. But you've also got central banks and governments looking at the technology. I'm just conscious of time.
Oh, can I add a couple of things?
Adi, sure.
So I think, first of all, you're going to have consolidation in this space as well. So, in the ICOs, we had 200 different versions of a blockchain, and it kind of doesn't make sense to keep having lots of different... In the internet world, we came down to the 3-4 internet giants. And so, to some extent, that's probably going to happen here. You're probably going to have some big winners. The second thing I say is that there's an expectation that you'd get a very quick return on some early emerging technology. But you look at all technology that comes through, AI, any kind of new innovation, it does take time. It takes the internet itself. It takes many years for the technology to actually take hold, and especially blockchain, which has its own complexities. So I think at a basic level, the tech worked. If you look at the ICOs worked. People got their tokens. They were secured by a public network and so on. The mechanics actually did what they said on the tin. I think there's a whole lot of stuff around it that obviously needs to mature.
And Seema, you came from a large, from the likes of Microsoft. And have you seen the trends changing and altering them? Because you've now gone into small companies. So, as Bridget said, lots of people were working with big banks and working with big companies and gone to set their own thing. Do you see that as a trend that's continuing with some of your other friends, not necessarily just in the finance sector?
Well, one thing I've definitely seen is, years ago it may have been around competition. We were trying to compete. But I think some of our clients, because we work together as well, there's definitely a feeling around we want to collaborate with smaller, more nimble, more agile, because they just can't get their own teams up to speed, and nor does it make sense. So we're definitely seeing that, where we're talking to product and engineering team at, big, large banks, asking us how do we solve access and control of their mobile banking, login, all of that sort of stuff. But it is more of a collaborative approach versus a competition. So I think we're definitely seeing that.
I think it's a really interesting point there, and it's not just in financial services. If you look at Louis Vuitton, Mo Henderson spent a huge amount of money developing a platform to try and tackle the problem of counterfeit products, and then opened it up to their competitors. BP developed a platform called VAKT, VAKT, and it's now responsible for 80% of all the production coming out of the North Sea because BP opened that up as a platform. So in terms of a style of business, it's been interesting how the technologies allow this collaborative capitalism, which we haven't seen before then. I'm getting a flashing light down here, and I'm about to probably get a boomerang on my ear from Jane if I don't actually call this to a halt. So I'd just really like to say thank you to my panel, and thank you very much for listening. And I think we're here for the rest of the day, so if you've got any queries and questions, then please do come to us. Jane.
Okay, thanks so much.